So, ladies and gentlemen, wonderful good afternoon, and welcome to our Admiral Markets Trading Spotlight webinar for Wednesday, the 20th of November. It's such a great pleasure that you be a part of this webinar this afternoon, and I hope you're doing good. The chat is open. If you have any questions, feel free to ask me whatever you want about this special topic or what is ever in your mind and in your heart and what drives you crazy, what moves you in your daily business. Ask me. You know, the biggest secret in trading is there doesn't exist any secret. So I hope you had a great start into your trading business and trading week, and you feel good, everything is in balance, you have your inner center, you have found your freedom in your life, and of course with, or maybe I should say despite, trading. So our special topic today is Forex hedging strategies, and we want to talk about a little bit about this stuff and what we can, how we can use it to make money in the market. And of course, again, if you watch this video or this webinar by a video on YouTube later, and if you have any questions, type it below this video and we will answer as soon as possible. And I want to encourage you to use our chat room here in our webinar. Whatever is in your mind about the single slides, then type in the chat box. I can see it with my right eyes here on my right screen. Okay, before we start, we have to see what is on the agenda today. So, of course, what is basically the meaning of hedging? How can you use hedging to reduce your risk and increase your profit? There are any kind of best markets we can use for hedging, and some strategies and how hedging fits in your own business plan. So I hope, guys, you have already a business plan, and because you know you need this like a red line for your own trading, because you need for every kind of business a business plan, or maybe strategies or hedging can be a part of it. So, and this is me, that's not really important, because you know this is your guys, you are more important than me. I want to inspire you how you can be successful in life and in trading, of course. Then this is my private opinion about this trading stuff. If you only if you are stable as a human, then you can be successful as a trader, because behind every trader there is a being human. First the human comes and then the trader. So this is my private opinion. This is the way why in my trading community and in our trading spotlight community and in my own community is the focus on trading, of course, but as well on and on personal growth and personal development. So we used to talk about what's your why. What's your real why in life? What's your purpose of your existence? All that stuff is so much more important than any kind of trading, because trading, even such hedging strategies is that what it is? It's just only a strategy based on probabilities, no guarantees, no safeties, no securities, how we used to do it in our life. In trading, we have only probabilities. So therefore, our mind is not made for trading. So for that, we have to change the mindset. And therefore, the same like you have your focus on trading, it must be as well, or in my opinion, more than focus on trading, you have to focus on your personal development. And this is my part. This is my ultimate mission, to inspire you, to have a little bit impact to your life, that it can open your mind, that it can plant some seeds in your minds, and I hope they will ripen and they will open up sometimes, and you see what does it mean to be a real trader. Therefore, my focus is on a human, not on a trader, because the trading success is based on life success. So I would say let's plant seeds, positive seeds, by positive thinking, by being nice and sweet to others, and yes, doing really good things. And trading will lead us behind the scenes. Trading is more than red and green candles. Trading is more than strategies. And I'm really happy that I have the support by Admiral Markets, by this wonderful, amazing broker, and because this broker will support me and encourage me to publish such thoughts to your minds. So Admiral Markets is a Forex and CFD broker with over 8,000 financial instruments in 20 offices around the world, and licensed by FCA, EFSA, SISEC, and ASEC, with absolutely wonderful spreads you can use for your daily trading. And we can use MT4 and MT5 with special editions. That's the right word. So, okay, let's talk about basically what is hedging. So, dictionary says hedging is risk management. So, give me just please 1 second, because actually I see. So I prepared it already. So just 1 second, please. Then that's the absolutely presentation effect. So let's see. Now here we go. Here we go. Okay, that's the wonderful presentation effect. So, but here we go. We will cope that challenge. It's a part of life. So now we are correct. Okay. Not responding. Here we go. That was my mistake, but yes, give me just a second, please. Okay, come on. Wonderful. No, that's not right one. I've actually really a problem here right now. So here we go. I guess this is the right one here right now. Let's see. Yeah, here we go. Sorry for that mistake, but I had the wrong presentation. Now it's the right one here. So let's talk about hedging, guys. What the dictionary says about hedging. Hedging is a risk management. It's a kind of risk management strategy employed to offset losses in investments. And hedging is an interesting strategy to reduce your risk, and it's the typical result to reduction in potential profits. On the one side, you can reduce your risk with this kind of hedging, and on the other side, you can increase your profits, your potential of profits. But hedging strategies typically involve derivatives such like as options and futures. But we have also hedging strategies. They work in Forex market. But this is basically what the dictionary says. I don't know, let me ask you, if you have any experience with strategies, please, maybe you can type it in the chat box, please, if you want, so I have a little bit overview who I'm talking to, if you have a little bit experience with this kind of strategies, because this is a really interesting and very important topic. So let's make a sum. Basically, strategy hedging is kind of risk management. It is able to reduce your risk and on the other side to increase your profits. But most of the times you use such options and futures, and I want to explain you. Well, that's a very, very thank you for your response. So what is hedging? Let's talk about a real, how should I say, a real example. The best way to understand hedging is to think it's a kind of insurance, a form of insurance. And I guess you have such insurances in your own life, life insurance for your car, maybe for your house. So when people decide to hedge, they are insuring themselves against a negative events that might affect their finances. So this doesn't prevent all negative events from happening, of course not. So this is a kind how our universe work. Everything you planned, it will come back in your life. So you can compare it if you are really angry to people around you. Not in the next minutes it will come back, but you plant a seed, and this seed will ripens and will grow, and sometimes it will opens up, and then it will come back to you. So please don't forget that. So this is also a kind of hedging. What you do in your life, what you think, what you say, what you do, everything will come back to you. That's one of the three universal laws. Absolutely. There are three laws, but this is another topic. But please see that in your life, that everything what you do in your life, sometimes it will come back to you, the positive, then the negative things. So kind of hedging is that you have an insurance against negative events. So of course, sometimes something happens in your life. So, but with such a strategy, with such a hedging strategy like an insurance, the impact of this bad events is reduced. And in practice, for example, hedging occurs almost everywhere, and we see it every day. For example, if you are a homeowner, you have a homeowner's insurance. You are hedging yourself against fires, break-ins, or other unforeseen disasters. So you see, you do hedging every day. So whatever you do in your life, always is hedging a part of it. But the best thing you can imagine in your own mind, it's like with insurance for your car. So maybe you have a car accident, you have an insurance for that, and the insurance will give you some money that you can, that the impact of this car accident is reduced, and maybe you get back from the opposite direction from the other client which was involved in such an accident. Then for that, it's kind of strategy. Reduce your risk. And maybe you are a dad or your mom, your parents and you have kids. Maybe you have a life insurance. So maybe something happens with you like a dad or like a mom, then the kids are, somebody can care for the kids if you have to leave this planet by an accident or by a sickness or something else. But for that, you can make hedging like, for example, like an life insurance. So I guess the message is there, and I'm absolutely sure you got it, and you can understand what means hedging basically. So in trading, hedging techniques generally involve the use of financial instruments known as derivatives. The two most common are options and futures. So I guess, I don't know where are you placed right now, but I guess you know options and futures, of course. So let's take, let's see an example and how it works. And the best example is you want to buy shares. And this is Corey's Tequila Corporation. So the ticker, if you want to see it, if you want to looking for it, it's CTC. It's American share. So although you believe in this company because tequila is just a kind of alcohol, and I guess as long as human exists on this planet, tequila and alcohol will exist as well. I'm absolutely sure. So, and if you believe in this company for a long run, you may be a little bit worried about some short-term losses in the tequila industry. Maybe we have a bad, oh, I missed the word right now. I have it in my mind. Let's see, just let me, line this one. So harvest, that's the right word. So maybe we have a bad harvest in 1 year, so that the tequila industry have a mob problem. And now you know you have this share in your account, you have it as an investment, and then you see, okay, the trend is really old and you expect a correction because you could read in the newspaper we had a bad harvest last year and the tequila industry or the alcohol industry have a big problem. So to protect yourself right now from a fall in CTC in this share, you can buy a put option. It's a derivative kind on the company, which gives you the right to sell CTC at a specific price. So a share, it's only a long only. You buy a share to anticipate from this company from a long run, because you say alcohol, people always drink alcohol around the world, and tequila is a part of alcohol. So now you know I want to buy this share, but also you know, especially if you follow Paul, Jens and me or our trading spotlight community, and if you don't know it, we have a trading community in Traders Yard. I will show you at the end of this webinar. So now you have the share in your depot, in your account, and you know, okay, we have problems about the harvest in the company or in the industry. And now you see, okay, maybe the price will drop down. And you want to hedge this drop down because you are engaged in long only. And it means the value of your shares are decreasing because no trend is always running only long, always. And sometimes you will have some corrections. And maybe you have a big problem. You can see in the big problem in the industry and they want to hedge. So if your stock price tumbles below the strike price of this put option, put means put it down, these losses will be offset by gains in the put option. And of course, there is no leverage in shares. You have 100 shares, that's all, by a price from $20 maybe. So that's it. But in derivative things, in derivative options, of course, you have most of the times you can use high leverage, 1 to 30, 1 to 100, 1 to 500, so on. That means if the price, the put is increasing, this put option is increasing by falling prices, and you have $1 and you have a leverage by 500, it means you make $500, for example. So, and with this it's kind of hedging. Your share lose money, lose value, because you see the price falls down by a correction. But you could see it before and you bought a put option. Put option you will buy if you speculate on falling prices. So your share loses by value, by the correction, but on the other side, you have a put option. And this put option increases in the value by a falling price. So you lose on the one side with your share, but you win with the put option by this falling prices on the other side. And this is kind of risk management. This is kind of hedging. Yeah? So you hedge the loss on the one side by a winner on the other side. This is the theoretical part. In practice, it's a little bit more complicated. In this special kind, I don't work with options or futures. Sometimes I make strategies or hedging strategies by the Forex market, and we want to talk about that. But this is what I want to explain to you, that you understand basically the sense of hedging by this special example. So how you can use hedging. Admiral Markets is our lovely broker, allows you to place trades that are direct hedges. So maybe, or especially in the Forex market. A direct hedge is when you are allowed to place a trade that buys one currency pair, such as USD GDP, for example, and at the same time, you can also place a trade to sell the same pair. So, to be honest, guys, I don't see a sense in this kind of trading in the same currency pair. But this is, Admiral Markets allows us to do that. So you can say, I want to buy USD GDP, British pound, and I speculate on increasing prices. But on the other side, you have a sell order, and you have a short order, and you speculate on falling prices. So if you have two open trades there, the other one loses, the other one wins. So, but in the same currency, to be honest, it makes no sense because it's a zero game. Absolutely. While the net profit of your two trades is zero, while you have both trades open, you can make more money without incurring additional risk if you time the market just right. That's the point. But the better one is if you hedge between different currencies. So it's not the best strategy to make hedging in one and only, or in the same currency pair like USD GBP. This means, and now here we go, about the human part. If you do that, so I know one or two traders that do that in that way, and I ask about the stop, they always say, oh, I'm hedging. I don't need a stop. Let's think about a little bit through. If you don't use a stop, you have a strong opinion to the market. And if you make hedging in one and in the same currency pair, you have an opinion. But believe me, you have to be aware about costs and fees on both sides. And of course, where's the sense to have two open trades in one and only currency pair? That means it's a human thing. Think it through. It's really a human thing. You cannot accept a loss. Even I think, and even I have, how should I say, I have a strategy and think the currency pair is increasing about the COT data or trend or indicators or something else. Or I have a strategy with the indication I want to go short. But to go long and short in the same currency pair makes no sense. Then you have a problem with your kind of thinking. This is not real hedging. This is, you cannot accept a stop. And you don't want to lose money. Here we go. There is a human part. This is psychology topic, not real strategy. So stay away from this kind of hedging and don't let you convince from other guys that this is a good idea. So where you should stop the place your stop order if you make hedging in one and only currency pair. That's not the real thing. It's not really important. That's not really, I cannot suppose that in that way. A Forex trader can make a hedge against a particular currency by using two different currency pairs. That's the most important thing. For example, you could buy a long position Euro USD and a short position in USD Swiss franc. In this case, it wouldn't be exact, but you would be hedging your USD exposure. And the only issue with hedging this way is you are exposed to fluctuations in the euro and the Swiss. So this is the better way to have a hedging strategy. Because this means if the euro becomes a strong currency against all other currencies, there could be a big fluctuation in euro USD that is not counteracted by your USD Swiss franc trade. So therefore, this is the better one. So this is generally not a reliable way to hedge unless you are building a complicated hedge that makes many currency pairs into account. So therefore, you can use a hedging or a correlation matrix in Admiral Markets, in MetaTrader 5, I guess, there is an indicator. You can use that. Or you will find some home pages in internet where you can see correlations. Which currency pairs are working to each other and in the opposite direction. And this is kind of strategy. This is a kind of hedging. So, and this is the better one because that's the obviously thing that some currencies are increasing while at the same moment the other one are decreasing. So actually we can see it especially in Swiss franc and Japanese yen, because both of them are the so-called safe haven currencies. So if you have strong increasing prices in the, how should I say, in the markets, money is going from the safe haven currencies like Swiss franc and Japanese yen to the risk on modes into the markets. If you have falling prices like the other last 2 days in the markets, you can see money goes back to the safe haven currencies like Swiss franc or Japanese yen. This is also a strategy, hedging strategy, that you can see, oh, I have falling prices, maybe a trend in the market like S&P 500 or the Dow Jones. Then you can have a look at USD Japanese yen or maybe British pound Japanese yen, but every currency where the Japanese yen is engaged or included, you will see a stronger Japanese yen. You can see a stronger Swiss franc. So this is a wonderful and lovely hedging strategy if you have open minds for that. It's a little bit complicated, and I don't suppose to you to use it in 5-minute chart or in hourly chart. Use it for swing trades. Maybe like us in the Dow community or in our Trading Spotlight community in 4-hourly charts or in the daily chart. So 4-hourly chart is a wonderful calm state of art you can make trading. It doesn't mean you have to spend too much time for it, and there you can make hedging. But we will have a look at the MetaTrader to see that. And here we go. Let's see an example, of course. So I prepared, look at this one, the S&P 500. So maybe you could see in the, how should I say, we have falling prices the last couple of hours. So you see falling prices in the markets. This is a kind of hedging, and you could see a little bit you see in Japanese yen, we saw the last hours always increasing prices. So let's see here we go, increasing prices, falling prices in the S&P 500 and increasing prices or a stronger, no, here we go, sorry, not this one, the wrong direction. You can see this one, basically falling prices in the Japanese yen. This means a weaker USD and a stronger Japanese yen. So let's compare it again. So you can see falling prices, decreasing prices, of course, like a trend with movement and correction, of course, and a stronger Japanese yen. That means weaker USD and a stronger Japanese yen. This is a little bit kind of strategy in hedging. Or you can see, for example, Euro, British pound. So can you see that? You have a little bit falling prices. Look at this one from here to here. This is now, let's see, no, this one. You see the falling prices here. And now have a look at the opposite, British pound, USD. You can see it's a completely other direction from here to there. You see, completely in the opposite direction. This is kind of correlation. So this is anti-correlation, Euro British pound on the short side. So that means a weaker euro and a stronger GBP, a British pound. And here, this is British pound, the first named, stronger, and of course, a weaker USD. It's always the same, weak USD and a strong British pound. So this is a kind of strategy. And therefore, I suppose, and I can recommend you to have a look at some correlation. Which currencies are working to each other? Which currencies are working in the opposite direction? So this is the best part, to compare such currencies to each other. This is kind of strategy or hedging strategy to reduce your risk, and on the other side, to increase your profits. We do that in our trading spotlight and of course in the, how should I say, in the whole community, of course, because it's really, really interesting. Basically, you can work in both directions in different currency pairs. And sometimes you have a cluster risk. This is not kind of hedging strategy, but you must be aware of that. If you have cluster, if you go long in New Zealand Japanese yen, New Zealand Swiss franc, New Zealand US dollar, New Zealand whatever, and New Zealand is basically weaker, you will have a big, big loss in all currencies, where is New Zealand dollar included. So that's always the better strategy, to work with different ways. So maybe British pound or Euro British pound or GBP, British pound against USD. Or let's see another example, like we saw in the slide. So you can see Euro USD. We had falling prices there. Let's see USD Swiss franc. We have basically increasing prices there. So you can see falling there, Euro USD falling there, and increasing prices in here, the USD against the Swiss franc. And Swiss franc is basically a called safe haven currency. So this is the kind of strategy, how it works. Either you use the market, Dow Jones and S&P 500, and you have a hedge by Japanese yen or Swiss franc as the called safe haven. So if you have increasing prices in the markets, you have decreasing prices in Swiss franc and Japanese yen. Or you use only currency pairs and you compare them with each other, maybe Euro British pound against British pound USD, or Euro USD Swiss franc. So have a look on it And you can see you can reduce your risk and increase your profits a lot. This is a really interesting hedging strategy in the Forex market. So, reducing risk and increasing profits, question sign. The main reason that you want to use hedging on your trades is to limit risk. So, and this is a real interesting situation, not in the same currency pair. If you make hedging in the same currency pair, you have a human problem, because then you don't want to have a loss. And this is that's not the point. You always will have a loss. Otherwise, you go hedging in that way, in the same currency pair, guys. It's like you want to stay in an elevator and you walk up and down. You will never go out in every kind of floor. Never. Hedging the same currency is like in the elevator, up and down, but never you will go out. You will get out anywhere. Hedging can be a bigger part of your trading plan if done carefully. You need to know which markets are in correlation or which currency pairs are in correlation. This must be a kind of your education. Please be aware of it. It should only be used by experienced traders that understand market swings and timing. Really, if you're a beginner, first of all, work with trend and price. That's all. And if you have experience in market, I guess more than one year, then you can see you have a little bit more experience. And then you can think about such things. But now you heard it today and everything is fine. You know what you can do. You can use it first on a demo account, not with real money. Feel it first. Touch it in a little bit first, then you can have your experience in that way. Playing with hedging without adequate trading experience could reduce your account balance to zero in no time at all. Guys, don't play with that. Please don't do it. So there is a question. Can it be done with the same currency pair that is in a long range and you hedge the swing? Maybe. This is a really interesting question. Thank you for that. This is really it's a little bit similar to you hold a long run in a share and you make a put option to reduce the risk of falling prices. That's interesting. Maybe you are a swing trader. Thank you for this wonderful and lovely question. Maybe you are a swing trader like me and you have a little bit more time and you have a swing position maybe in Euro USD, because you expect a long run. So you can make short hedgings, maybe for one day, if you can see, okay, there must be after the next move, and there must be a correction. Now you can make profit if you trade the correction to the lower side. Yes, so this is kind of strategy. This is kind of hedging as well. If you have different time frames, no sense in the same time frame. But if you work in different time frames, maybe you have a long run in 4-hourly chart and you make a hedge in the hourly chart maybe to trade the correction. This is a great strategy, of course. Really, really good question. This is my answer. Try it, but I would try it. Maybe you have on a real account a long position or a long run position for a chart. Maybe you open a new demo account to try it first without the human part and hedge the correction. Interesting idea. Yes, this is absolutely possible. So, but basically I want to say, guys, please be aware that you need education for that and you need experience for that kind. So which markets? Bond markets against indices, Forex against indices, risk on, risk off mode. I explained it, Swiss franc, Japanese yen, commodities against the futures, you know, COT data, currency against each other, for example, Euro USD to USD Swiss franc, or gold, interesting, against dollar. Because if you have increasing dollar, if you have a strong dollar, you have very, very weak commodities like gold, because gold is paid by dollar. And if you have a strong dollar, they must hedge, so gold will be lower, and other currencies as well. That's the best markets. So sometimes, thank you, I have only 3 minutes. I only use gold dollar, and I use the currency pairs to each other. Is it a kind of your business plan? It's your choice. You have to choose it. Hedging could be a part of your business plan, but surely not at the beginning. It's very complicated strategy, which is why it's important to learn the basics of trading, of course, and the behavior of markets first. Therefore, please figure out which kind of trading suits you best today. Of course, depend on your account size and available time. Let's make a conclusion. Hedging is a very special and fairly complicated trading strategy. And if you think it's a little bit complicated, watch this video again on YouTube. I guess tomorrow or the next day, it will be published on YouTube channel of Admiral Markets. Only experienced traders should use this strategy to reduce the risk and increase your profits. You will find it in Forex as well, like in other markets, and it must be a part of your business plan. You need time and education for that. To make it easier for you, because always we have the question, what now we are done with the webinar? So you have any questions for that? Be a part of our Trading Spotlight community. I will be available for the next 2 hours live in this our Trading Spotlight community, and I can answer every question you have about the slides or about that. Be a part of this community. The only point is you need a deposit on your live account. And as well, Paul and Jens are also there in this trading community. Use this great chance to get in touch with me in the Trading Spotlight community. You can see here on Trader's Yacht. On Friday, you can see Jens, my wonderful friend and congenius partner here at Admiral Markets with the Forex fractals. What are fractals? How can this be applied to trading? And some examples. Same time, same place on Friday, November the 22nd. More on our Admiral Markets, or contact us on email, YouTube, or Facebook. And I say, thank you again. You know, my English is not is based on German. I'm a German guy. My English is as well. But I guess, and I hope you understand everything. I wish you everything. I wish you a wonderful rest of your day. And I hope we will see each other in our trading community spotlight on Trader's Yacht. I would appreciate it a lot, and I want to welcome you there. Have a nice day, and please be careful about your thoughts, because they are the beginning of your actions. See you. Bye-bye.